Audio Jungle.
Steps to buy gold online. Online gold versus offline gold. Do you consider yourself as a passive investor? Are you looking to set your investment aside, somewhere safe with practically no risks? Then there is no shame in accepting that gold might be just the right choice. Gold is a great asset class because its price moves in ways that are easy to anticipate. Investors seek safety in gold when the economy and the volatile stock market are doing poorly. Investors often turn to gold when looking to protect their money from a financial disaster. Plus, investments in gold have done very well as of late 20th century, bringing in annual returns of around 10 to 15% or more. So today's video will be all around investing in gold, especially for beginners. Plus, we will also look into what's the difference between owning e-gold and physical gold, its pros and cons, and the rest of prerequisites you might be requiring to get started. So, if you are curious and feeling thrilled about our talk of the day, then consider subscribing to our channel and pressing the bell icon so we could keep you connected to the exciting content we are releasing regularly. So basically, there are somewhat three forms which you can own gold. The first option is to purchase actual gold in jewelry, coins or bars. It will cost you making charges and GST, which sums to around 8 to 10% of the total investment. Plus, once all of that is done, you would then have to worry about how to protect your valuable from thefts and thieveries. On the other hand, there is digital gold, which is completely performed over the internet. You find a broker, you enter your information, then proceed to select the amount you want to invest, select the payment, and boom, you are done. Though you still would have to pay brokerage fees, but it would be far less hectic than worrying about keeping physical gold in your house, etc. Now, on the third spot of the list are gold-backed financial instruments such as exchange trade funds, ETFs, or sovereign gold bonds. Bonds and ETFs are backed and issued by the Indian government, so there should be no problem revolving around its legitimacy. It's completely safe around its legitimacy and non-volatile. In fact, most of the seasoned investors switch to gold-backed bonds to protect their portfolio from the stock market's volatility. But before we get to choose what is best and what is not, let's examine such of them more closely, with first starting from digital gold. Benefits of digital gold. First, with just a redistribution, companies have varying limits on how much you may spend. A further benefit of investing in digital gold is that it allows you to avoid making charges and paying related fees. As a second selling point, it is only provided 24 karat gold. Thirdly, the purity of safe gold is 99.5%, whereas MMTC PAMP is 99.9%. The dealer will keep the gold in a security location until it is time to redeem it. Safe Gold offers 2 years of free storage, whereas MMTC PAMP offers 5 years of free vault space. Fourthly, the gold price is set at a moment regardless of inflation or deflation and remains unchanged throughout the transaction. Fifth, you have some options. Accept possessions of the gold, sell it back to the seller at the current price, or get a full refund. The sixth point is you may exchange the gold for jewelry at authorized retailers. The seventh point is all about the gold housed in secure locations, has theft protection. Buying and selling digital gold may be completed much more quickly because of investments. The eighth point is that need for demat account to purchase or sell gold is eliminated. Ninth, The freedom to use digital gold as one sees fit in a significant benefit. Small, convenient online investments may be made whenever you choose, adding to the sizable gold holding over the time. Neither daily market fluctuations nor significant one-time investments are required. The boundaries have been breached by digital gold. Only the big dogs could play when it comes to investing. But today, even the little guys can get in on the action. How to acquire gold online? Buying gold online is just as easy you do it physically. Instead of visiting your local jewelry, you can look up to internet for the top most credible e-gold broker. I personally prefer ZAR. It's very simple. They don't require much information, just a valid contact number for signing in and a payment route for you to make the transaction. There is no minimum amount requirement. You can buy e-gold with 1 rupees and get going just as easy. The units of e-gold will stay in your mobile application. You can buy more and sell whenever you want in the matter of seconds. It's just like buying and selling stocks, nothing extra. Other than that, you can also redeem the e-gold into a physical gold when needed as well. Though that will cost you an extra making charges plus GST plus delivery charges. But this option can come really handy when you are feeling the need to addiction to your jewelry collection. Then what is the point of physical gold? Over the years, demand for this yellow metal has only grown. The majority of gold purchases are for personal use. Jewelry, gold coins, and cookies are all common ways to spend them. For this reason, the initial outlay for purchasing physical gold is that it is more lavish than digital gold. There is also an important point to be noted that gold investments provide taxable capital gains based on how long the gold is held. Gains on the sale of gold are subject to income tax at the applicable rates if the sale occurs during the first 36 months. If you wait more than 36 months to sell your gold, you will have to pay a long-term capital gains tax of 20% plus deductions. Plus, there is also a wealth tax imposed on purchases above 30 lakhs Indian rupees. So make sure you mind the calculation before taking the step as well. Gold in digital form and physical gold both have benefits and drawbacks. However, it is up to the individual to decide which investment is best for them. If one's only interest in buying gold is an investment, one may choose to do it through digital gold rather than actual gold. However, there are restrictions on how long one may keep digital gold in storage. Alternative digital assets such as sovereign gold bonds and gold ETFs, exchange-traded funds, may be preferred in such circumstances as mutual funds. In contrast, buying gold physically is okay for personal use but not as an investment. Gold in any form, from 10% to 20% in a portfolio, is generally considered a safe bet. This protects the portfolio against price swings, current fluctuations, and inflation by increasing its diversity. This was all from our side to guide you about the basic steps to buy gold online and the difference between online gold and offline gold. So tell us in the comment section in which type of gold you are going to invest. Please subscribe to this channel and press the bell icon if you are new to the channel so you don't miss any new stuff. Omega Finance signing out.